she went down to live with her son.
All right,
And
well,
then
welcome to
they
Board
had a dream
Financials.
about
If you
going
don't
on
have
a
yourself
movie.
on
We
mute
both
right
have
now,
a little
you could mute
native in us.
yourself.
Yeah. And then the next day we found out she'd passed away.
Interesting.
She came to say goodbye.
Okay, I think I got it. So Board Financials, what do I need to know about my cooperative's financials and more? Let me get my notes out. Okay, so I know financials can be daunting for some people, not for everyone, but sometimes I know that when somebody sees a number or a lot of numbers on a sheet of paper, their brain just shuts down. I've definitely been there before, looking at a sheet of paper, seeing a bunch of numbers and just being like, I can't deal with this. This session is hopefully to demystify some of those numbers and simplify some of those numbers and translate them into information about the things that you already know about your cooperative so that you can make those better decisions. You don't need to be an accountant. You don't need to be an expert. You just need to know what they mean in relationship to everything else that's happening, to the lived experience that you're having, and to the cooperative as a whole. So, this is really just about relying on the people that you can ask questions to. You can always ask your TA provider, your on-site manager, and even your bookkeeper to talk a little bit more about what some of these numbers mean, especially when you have questions as they pop up. And looking at how these patterns are informing what's happening at your cooperative. You might think everything's okay, and then 1 month all of a sudden something pops up and you're like, why didn't I know this? Maybe there was some clues in the financials that you could have had. So these are some of the ways that you can pick some of those up. But we're all a team in this process, right? Your board is your team. And so you should be thinking about this as really learning as a collective and demystifying these financials together as a group. And if you're a treasurer on your board, I also don't want you to think that you have to be an expert. I want you to think of yourself as a facilitator of numbers. So you're really ushering some of this information to your board members, and then you're also going back and asking more questions. So yeah, that's what we're going to be doing today. Our agenda, we're going to talk about where your financials come from, how they get generated. We're going to be talking about all the different sections of your financial worksheet that your TA provider sends to your treasurer, and then your treasurer works with the board to sort of talk about. And then we're going to talk about how some of that information translates into asking the right questions when things pop up. And we're going to go through a few scenarios, and you can, and we're going to see what we might need to know before we can make that decision. Okay, so let's start with why financials are important. So, we can say that they're important, and I think we can kind of know them, but what are they actually telling us and why do they matter? So I put a few examples up here. First off, you want to know who owes the co-op money, right? So who's not paying their lot rent, and can someone tell me why that would be important? The silence is deafening, y'all.
Well, you're not going to be able to operate in the black if you aren't getting all the money that's due you as a co-op.
Absolutely. But where would you find that? Is that going to be in your profit and loss or your balance sheet? We can get into that later, but who owes you money is not just necessarily exactly like you said, can you pay your bills, Pat? You're absolutely right about that. But knowing where to find that information and knowing what that means, super important. What about how much cash do you have? I mean, other than paying your bills, what else could that implicate for you?
I would say more debt, because then you have to go through eviction if it keeps building up.
Absolutely. If you don't have the cash from people not paying their lot rents, then you've got legal fees, you've got time where you're not generating revenue on that lot. Absolutely. And then where are you actuals versus budget? So are you on track with your budget? You guys all put together a budget at the end of the year for the next fiscal year, and then you're tracking your actuals based on your budget. What is that telling you? Why is that important?
That tells us how much money we have, and if we're staying with the budget, we're not going over, so will we have to raise rents, or it all affects that.
Absolutely. Raising rents, right? That's the big thing, is we want to make sure that we're staying in line with our budget, because we've budgeted so that we don't have to raise lot rents. And so if we keep on track, then it means that we can continue to maintain that stability, right? So super important. Let's see. So can someone tell me some other examples of just general information you can learn from your financials when you go through them? It could be anything and everything.
Finding major mistakes
Ooh,
when you've already had an audit instead of before.
do you mean like the accuracy of your financials overall?
Yes.
Super important. I mean, I can't stress this enough. If you can't trust the financial documents that are coming into your organization, then not only can you not make an informed decision, but you're operating in the dark, right? You're feeling around where the walls are and where the furniture is, because the numbers, if you can't trust the numbers, then why are you using them, right? It's a useless tool at that point. So I think what Natividad said is really important. And that's something, if you're concerned about that, you should talk to your TA provider to figure out, maybe some solutions. Or just, just talking to your on-site about like where you think the discrepancies could be, but that's really important. Yeah. Anything else?
Where your cash is flowing to, like where are you spending the majority of your cash versus other areas where you're not spending your cash?
Ooh, awesome. Really good point. Your budget and your, when you budget all those expenses, you might be seeing a surplus at the end of the month, right? But you might have gone over budget for your operations and maintenance because you haven't incurred your snow removal budget that's going to start towards the end of the year, right? So you're not going to have enough money you're going to be over, right? And so each line is really important to monitor to make sure you're within that realm of what you budgeted for the year. What else, y'all?
Well, I still get confused about how much money is going into reserve and what each of those, how you use each of those funds. We have like 3 different accounts, and I kind of had the gist of it, but not completely.
Great question. I've got a slide for that later.
Okay.
And if I don't answer your question, say it again and we'll talk about it. Is that cool, Pat?
Yep.
Sounds good. All right, let's go back here. So I found this quote: information is not power, power is power, but what turns information into power is action. Y'all are board members. You are the decision makers for an entire body, an entire community, right? And so you have not only your one vote, but then as a board member, you're that much more implicated in making these decisions for the cooperative. And so those actions that you're taking have to come from a place of information, because you're that exercise of power is just so tremendously important. And I really liked the way that this quote kind of turned that together, because right, your financials is your information, but until you translate that into action, right, that's where the power really lies. Okay, so part 1, source of your cooperative financials. So where do these mystical numbers come from? So every month, your bookkeeper, your property manager is producing 3 reports that are getting sent to your TA provider and to your board members, depending upon how you've set that up with your property manager or bookkeeper. So there's the balance sheet, the profit and loss statement, and the accounts receivable. There might be more reports in there, but those are the 3 ones that your lender is actually requiring to get reported out to them as well. So your balance sheet, you need to think about it as like a picture or a snapshot, right? So it's a moment in time. It does not reflect a period of time, but everything up into that moment. So it includes your assets, liabilities, and your equity. So your assets, more importantly, are going to represent your cash status, right? That's one aspect of your assets. It's also going to identify, your land value. That's part of your collateral, as part of your loan. It's going to have other sort of things that your cooperative owns as a collective, because those assets are balanced against your liabilities, which include your mortgage, any other debt that you might have, and also includes your accounts receivable. And then that's why we break out that as a separate report, because it's really important that we get to see the details of that accounts receivable. And then, oh, actually, accounts receivable is in your assets and your liabilities is your accounts payable. I'm sorry. That's not super important right now, but it's something I just wanted to mention. So we'll get into accounts receivable when I get there, but I did misstate that. And then there's your equity. So you remember equity when you pay your share, when you first enter into the community, that gets put into an account. That's your equity. It's also your retained earnings. So any surplus that you have that you're not putting back into your replacement reserve is going to go into that line as well. I'm not sure that those things are reported to your mortgage lender, but is not something that you are going to be actively tracking as a cooperative. So really your balance sheet, the most important thing that you're going to find there is your cash, in my opinion, and your accounts receivable. Your profit and loss statement is more like a summary. So when you generate a report, you have to determine from when it starts and when it ends, because what you're doing is you're seeing how much revenue you've generated during that period minus how much you've had to spend. And that determines if you have a deficit or a surplus during that period of time. So this is really important to understand because it's different than your balance sheet. It's telling you different information, but it's also has a different perspective completely, because it's not a snapshot, like it's not a picture of a moment in time, but it's actually like it's a movie of a period of time based on how long you want to look at it. So most of yours are going to be 1 month at a time, but you also provide quarterly reports to ROC. And as I mentioned, accounts receivable, these are part of your assets on your balance sheet. And we break this out because this determines who owes you what money. So your accounts receivable, every month, you're actually booking your income, right, of everyone that's paying that lot rent. But the way that you track the people that aren't paying is on this line. And so it tracks it over time so that you can see how much has been accrued over the course of their life at the cooperative, so that you can make sure that you're holding them accountable to pay back that debt to the cooperative. That's owed money. That's what the co-op needs to collect eventually. So I'm going to move on from that, but I'm going to go back to that. So we're not through with accounts receivable.
Sorry, we had a power surge, so I'm back.
Oh, welcome back. The reason lot rent, I think, gets a little bit confusing is sometimes is on this slide, and so I want to talk about that in a second. Actually, let's go ahead and talk about that now. So when your community has, let's see, every month your community is billing everyone that lives in the community that's actively living in their homes their lot rent. When you receive, so they're incurring That's occurring, right? So that is, you're recording that in your financials as revenue, but that doesn't necessarily mean that you've received that cash from them. You do, and this is called accrual accounting. It also implicates your expenses as well. But this is most important with your lot rent. And that's why your accounts receivable is important, because this exists on your balance sheet. But you're actually, you're booking it on your profit and loss statement to say, yes, this income will come to us. And that's the revenue of our corporation, and that's in our profit and loss statement. But then if you don't receive that cash, you don't know that unless you look at the balance sheet. So you see the difference between those two statements. So that also means that in your expenses, like say somebody comes and mows the lawn for the entire cooperative and they give you an invoice, you're going to record that invoice as soon as you receive it, not necessarily when you pay that invoice. That's also accrual accounting. This is required by your lender, so that's really important to understand as we walk through some of these financials and the way that information is being organized in these different ways. I apologize if I'm being, if this feels a little bit overwhelming right now, but we're going to break things out to make them a little bit more simpler in a second. So I mentioned our lender requirements here. Tom mentioned them on the call before as well. I've got a slide a little bit later about your lender requirements. This is kind of the most interesting part, is that they require the accrual accounting, and that's how a lot of these reports get generated. Is your on-site manager is giving the information to your bookkeeper, or your on-site managers and your bookkeeper are both your property manager, and they're getting all this information, they're aggregating it, they're running these reports, the balance sheet, the profit and loss, the accounts receivable, they're providing it to the TA provider. It's translating it into this financial worksheet that you see every month, and then giving it to the board of directors. And then the board of directors is kind of taking all this information and making decisions. So I wanted to make sure that it was clear on where that was coming from. So this is what your financial worksheet should look like. Is everyone receiving a financial worksheet? Is this how you're receiving financials every month? Okay, I just want to make sure that is what you're seeing, because obviously this is not what we try to do as TA providers, is take these 3 reports and translate them into a worksheet that's a little bit more digestible. That's not a bunch of numbers on a sheet that you have to like go through and highlight and figure out what everything means and where the changes are. We're trying to do some of those metrics for you. So that's where this comes from. I made up a cooperative for tonight called Diamond Housing Co-op. And we're going to be going through their financial worksheet, and I'm going to be asking you guys to help me demystify what's happening on their worksheet. Maybe we can, and there's not set answers, right? So we're interpreting these numbers to say, this is maybe what could be happening, right? Because sometimes financials are just telling you, pushing you towards questions that ask additional questions, right? So there's not always firm answers about why something might be happening. And yeah, so how is everyone doing? Is everyone feeling good? Like we're on the same page so far?
Emily, can you answer the question, what is a TA provider?
Thank you, Natividad. Yes, a TA provider is a technical assistance provider through NCF. So that's me, that's Tom, and that's Julie. Does everyone on this call has a TA provider? Is that correct?
Yes.
Okay, I just want to make sure. Great. All right, so let me see. Okay, your financial worksheet breakdown. Okay. First off, so it's broken into 4 categories: your occupied versus vacant lots, your budget versus actuals, your cash status, and your trends tracking. So what I'm gonna not do is bring back in this language around balance sheet and profit and loss and accounts receivable as much as possible, so we can keep the language super straightforward and relating exactly to what's happening. But if you want to know where any of this information lives, you can ask those questions and I can kind of relay those back to you. And then you can always get that raw data from your property manager, your TA provider, your bookkeeper, your on-site, if that's something that's you want to dig into further. Okay, so this is the first part of this worksheet for the Diamond. This is the June report for the Diamond Housing Cooperative. Looks like they've got 66 occupied homes. They've got 8 vacant lots, 1 vacant home, and 1 pending application. So can anyone tell me why any of this information matters? What's important here?
This will help to keep track and tell you what your income and loss is at this point for rent, for the occupied homes versus the empty lots. And also, if you have any pending applications, it helps to let the board know that there's a possibility of a move-in.
Absolutely. And what about these 8 vacant lots and this one vacant home? What does that tell you?
Big loss of income.
At the same time, big potential, right?
True.
So I know as a board, you're always thinking about how can we cut expenses so that we can make sure to stabilize our lot rent. But I think this section is first and foremost because it's really showing the cooperative, hey, we could increase revenue so we don't have to concentrate so much on cutting expenses all the time. Both are important, both balance each other out. But this sort of sustainable revenue, we're sitting on 9 potential lots that could be generating revenue right now. So what can we do as a cooperative to make sure that that number is going down so our revenue is going up? Cool. Any other thoughts on that one?
So like for us, this is the first time in many years we've been able to fill lots. So we've now seen an increase of homeowners by 4 with a possibility of a 5th coming soon. So we still have 3 empty lots left.
3 empty lots is 3 potential lot rents that you'll get soon, right? It's motivation.
Yes, it is.
Okay, and so your lot rent, as Natividad said, is your revenue, right? It's coming in, it's hitting this revenue line, and also in this revenue line, what's getting reported is things like late fee, water income, if you recollect for water, interest income. What are other things at your cooperative that you account for in your revenue?
Late fees. Oh, you already have that in there. Attorney fees that are paid for from evictions. New membership fees. Trying to think of what else. I think that's it.
Anyone else? What else does your cooperative include in your revenue?
We collect parking fees.
Oh, parking fees. Cool. I know at 5 Lakes, they started doing RV rentals. They got a special consideration for RV rentals. So that's exciting.
The community center rentals.
That's great. Community center rentals. Peggy, I see you're on the line. Anything else from Pam? Oh, and Bobby as well. Anything from Pamel Creek that's not listed here?
Not that I can, late fees, application fees, violation fees.
Violation fees, okay.
Mm-hmm.
Yeah, you've got all your utilities. So you do your, you separate out your water and your sewer. Do you guys have laundry, or is that another cooperative I work with? Okay.
No, we don't have that. What we have is tax and trash to Shelby. That would be something that's on there.
Okay, yeah, so this is all revenue that you're booking. Now, expenses get a little bit complicated. I wrote out all of the headers that you're seeing. The administration, utility, operations and maintenance. And then you've also got your real estate taxes, insurance, and reserve contributions that get factored into your expenses. Can somebody tell me some expenses that go under administration?
Office
Office, yep,
expenses.
On-site manager,
absolutely.
your management company,
Absolutely. And what about utility income? That's just your, I guess.
Internet, phone, and yeah, internet and phone.
Yeah, it should be a utility, right? But it goes under administration right now. We should probably consider maybe moving that
yeah.
eventually. But utility, yep, we've got, just
Street lights.
exactly, electric, lights.
gas. We have electric, gas, and I'm trying to think of what else. I think that's just it, electric and gas, because the other stuff goes under administration.
Yep. And then what about your operations and maintenance?
Fire
Groundskeeping.
extinguisher cost,
Yep, absolutely. Groundskeeping.
Snow removal.
Oh yeah, that's a big one, right?
let's see, we pay a yearly fee for, what's the word? Can't think of it. Security to the community center storm shelter, and also for all of our fire hydrants.
Oh.
Licenses.
I mean, not our fire hydrants, the small ones that you have to have with inside your fire extinguishers.
Okay.
We pay that yearly. I don't know if anybody else does that.
I've never heard of that, but I believe you, Natividad.
We have a rental house, a stick-built home that we keep a fire extinguisher in. And then there has to be one in your office and one in the garage area that we have, as well as the storm shelter. So all of those have fire extinguisher cost. They come yearly to do that.
Okay.
You
And then
have yearly license fees.
Yes.
that usually goes on, I don't know how you book that, but we usually put it under administration, but it certainly could go under operations and maintenance as well. That's what's interesting is typically there's a set chart of accounts. And when you hear somebody say a chart of accounts, it just means exactly what you guys are listing off right now. These are just categories of revenue and expenses or things that you might find on your balance sheet. There was ways of listing those off. So if you ever hear those names, and then you guys have a standardized chart of accounts based on your lender. So that's what's kind of cool is everyone has different expenses and revenue, but you've got standardized categories that you're using as well.
We also call that a general ledger as well for coding.
So real estate taxes, those real estate taxes and insurance and reserve contributions are all going under expenses, but those aren't being actively paid out, right, by the cooperative directly. So can somebody explain to me how they know that their real estate taxes, insurance, and reserves are being kept up?
Aren't those expenses paid as part of your mortgage payment to Rock USA?
Absolutely, Pat. And I think you're answering your own question right now, right? Because those are 3 of those accounts that you were talking about earlier. Was your replacement reserve account, your debt service reserve, well, not your debt service reserve, but your tax and insurance escrow. So they're paying all 3 of those items out of those 2 accounts. And so every month you're replenishing that through your mortgage payments.
Emily, we pay our own workers' comp under that.
Everyone pays their own workers' comp. You're not alone in that, Natividad. So insurance is your general liability, your umbrella, your board of directors, but you're absolutely right. Your workers' comp is separate because not everyone needs workers' comp. Okay.
Our water assessment, we get that taken out.
Oh, okay. So that's going to be
Along
going
with
on.
the insurance.
That's probably going to be going under insurance then too.
Where does,
Yeah.
oh, I'm sorry, go ahead.
No, go ahead, Pat.
Where does the money come from? Natividad, help me out here. We have an account that's in a local credit union, and that's where we can take out petty cash, where we can do miscellaneous expenses we need for something like National Night Out or something like that. And I know it's dictated by Rock USA how much we need to have in there. And I believe it's like $19,000 or $20,000 for us. Where does that come out of mortgage? What?
No, that's separate. It's operations.
Okay. How do we replenish that?
Oh, Pat, we'll talk about all the bank accounts in a minute.
Okay.
But
All right.
no. Thank you for that question. That's real good.
I'm not trying to get way ahead or anything. You were talking about the other two accounts, and that's where I jumped in.
No, I just
Thank
wanted to
you.
make sure you knew you were answering part of your question from earlier when you were answering that
Yep.
question.
Thank you.
Of course. And so moving on, we've got the next part of your financial worksheet is your budget versus your actuals. So again, this is why we just went through our revenue and our expenses, because I wanted to show you guys where these numbers are coming from and what's getting factored into each of these. So the Diamond Housing Cooperative, these are their June financials. So you're going to see their month of June there, and then their year to date. So that's 6 months of financials there. So can someone walk me through the income by month and year to date for the Diamond Housing Cooperative?
Pat, this is where you jump in on the list.
Well, yeah, I usually give this part of the report every month on the agenda. The budget for the month is how much you have budgeted for each month of the year for your annual budget. The actual is how much you have actually spent.
So you can say those numbers and then tell me, are they over or under?
In this case, the budget numbers are higher than the actual. So thank goodness in this case, the Diamond Co-op is under budget.
You said thank goodness?
For the month.
Under budget for...
Oh, no, I'm sorry. Yeah, see, this is why I needed this class.
No, you're good. Take your time.
Income for the month. No, we're under budget for the income by $2,000, a little around $2,000. The year-to-date budget is $210,000, but the actual is $205,275. So we're $5,000 under budget.
So what does that mean?
Income year-to-date.
It means the vacancy losses.
Yes. Or in our case, if you have like a major water main break or something that causes you a large expenditure that takes money out of your account.
Oh, so this is
yes,
income. Income is all right. We just covered what income was. So income is lot rent, it's your laundry,
Right.
It's your late fees, it's all those things. It's not factoring in the expenses yet. So this is all just the generated income. So what are some reasons it might be below budget?
That you have large delinquencies, that you have a lot of vacant lots.
Yeah, so delinquencies are not going to be factored into income. So this is really, I appreciate you saying that, because this is what gets confusing for a lot of people, is that you're booking your income when that service is when that lot rent is accrued, so the first of the month. So what you're saying is when you're coming under budget, you're not meeting the like you said, the vacancy is higher than expected, but your delinquencies are not factored in here.
Okay.
Does that make sense for everyone?
Delinquencies would have an impact though in your monthly accounting.
It
But she-
absolutely does. It just doesn't appear here yet.
Okay,
Because it's booked in to it, Pat, at the beginning of the month, like you have it, but you really don't until
Got
the
it.
following month, so.
okay.
So let's move on to operating expenses. Who can take me through what's happening at the Diamond Housing Co-op with operating expenses? Teresa, could you take me through it? Or Julie from Prairie Lake?
Their expenses for the month are less than they've budgeted for, so they're doing good in that respect. But they're over by $2,000 for the year, so that's not so good.
Absolutely. Thank you. Yep. And a lot of reasons why that could happen, right? So we mentioned snow removal earlier. Maybe the snow removal happened early in the year and it was over budget. And now it's summertime and they don't have that, but it's really good to know, right? The year to date versus what's happening in the month. So hopefully they're playing catch up right now.
So I have a question. Would
Mhm.
you account for late invoicing and all of a sudden you get 2 invoices from your plow company in 1 month? Because that's happened in the past where, they're playing catch up to us, but then we're spending a ton of money at one time.
So it's when the service is incurred, right? And so when the service happens, that's when in accrual accounting, that's when you need to book it. So that's something that you need to talk to your bookkeeper about or your property manager to make sure that when that service is incurred, that happens in that month. Now, if the service is invoicing late, that's something that you'll have to sort of negotiate with your bookkeeper to see how that works. But that invoice should be for that month that it's incurred so that it gets bookkeeped in that month. But I know that's something that's a perennial issue for so many cooperatives.
But we have a possible fix for it, so now it could change.
So cash flow, I'm just going to quickly go through this because I want to make sure to get through the whole presentation, but you'll notice that 35,000 in income minus 14,000 is not $1,000 in cash flow, right? So what else is being taken out here before we get to our monthly cash flow? Can anyone tell me? It's going to be your mortgage payment. So their mortgage payment is $21,000. And so when you take out that 35,000 minus the 14,000, you're also taking out the principal and interest payments that you're paying your lender in order to get your cash flow for the month. That cash flow is going to directly respond to how much money you're then replenishing back into your cash reserves, theoretically, right? But it's mostly just a way for Rock USA to determine what we're going to talk about later, which is your debt coverage ratio. So that's what this comes out of. Diamond Cooperative is not doing so hot. They're, again, playing catch up. Their monthly cash flow is over by $2,425. But for the year, they're way under. They're looking at $12,000 they're playing catch up with. So there's a lot of reasons that could be happening. You'd have to look at the historical financials to figure that out. And we're gonna be getting there in a minute. So let's keep moving. So your bank accounts, Pat, this is what you're talking about, right? So we've got 5 bank accounts that your lender requires. It's a lot of bank accounts to keep track of, but it's really important. What are the 2 bank accounts that the cooperative is really controlling right now?
Reserves.
Well, are you controlling your reserves, Peggy, or are you replenishing them?
Operating and savings.
Exactly. Yep. So Peggy, I know you're on the phone, so it's hard for you because we've got these slides up, but I've got the 5 bank accounts up here. So I've got operating and savings. So your operating is where the action happens, right? It's where you're putting your lot rent and you're paying your bills. So everything's going in and out. It's a constant ebb and flow here. So your operating account could have major fluctuations every month, but your savings account is really, every cooperative thinks about their savings account a little bit differently. I think a lot of people call it a working capital account, but some people I think I wrote that wrong. It's a working capital account. Some people internalize it as a savings account, right? It's a rainy day fund for when you have something unexpected. But this is also a way for Rock USA to say you need to keep a certain amount of money in this so that when something unexpected does happen, you've got enough money to be able to pay that bill. But those are the two accounts that the cooperatives is really controlling. And then you've got your replacement reserves, your debt service account, and your tax and insurance escrow. So your replacement reserve, Peggy, what is that?
That's for capital improvements.
Absolutely. And you're replenishing that every month through your mortgage payments. Can somebody tell me what your, oh, go ahead.
Well, what I was going to say is that's what Rock controls as far as spending.
Absolutely. Yeah, you've got to get approval from your mortgage lender to be able to use your replacement reserves. But those replacement reserves are really there for making sure that you can improve the infrastructure and the collateral of the property. In the last cooperator, we wrote 3 pages about the capital improvement budget. So I highly recommend you guys taking a look at that to get into detail on that.
Yeah, that was great. That was a good article.
Oh, thank you, Peggy. I'm glad you liked it.
How do you know when to ask for something out of the replacement reserve?
That is a great question. I think the best way to think about it is to, again, this article is 3 pages long, so you can go into a lot of detail with this. But I think the first question you have to ask yourself is, am I doing an unexpected maintenance sort of onto the community, or did something unexpected happen and I need cash for it and it's just for the maintenance of the community? Or is this a capital improvement that implicates the entire infrastructure of the cooperative and it needs to be maintained? So something that would have a shelf life of like over 3 to 5 years, that capital improvement. Tom, am I kind of getting that right?
Yeah, that's kind of what we're going through with the flood damage in our road right now.
Absolutely.
Trying to determine if that's maintenance or capital improvement.
I'm going to phone a friend and bring Tom into this one, because this is just a constant battle, I think, for us.
Yeah, I mean, if you look at the IRS rules, it says it needs to be an improvement or an extension of something. It can't just be a repair. So it has to be something beyond just a repair. The reality is that Rock Capital will make exceptions to that. If it's a big, your question about your road repair, Peggy, right? So if it's, in that case, I've seen them make exceptions to the rule. They don't apply the IRS rule in that case because it's going to be a big expense. It involves.
Yeah, this is going to be a total replacement.
Yeah, and it's a big asset. It's a permanent part of the park. It's not like it's going to be there for if it works. If you don't get another flood, then it's going to be another like 50 years before you do it or whatever. So.
Yeah. I guess I was always under the assumption that capital improvement was something that, like the sewers, whatever, 20-year or 25-year life shelf or shelf life. I mean.
Yeah, I think the needle's always moving and we're always trying to track it. So it's always good to ask Rock Capital if you're unsure. But that's one of your accounts that you have that it's reported through your cash status. We've also got your debt service account. So your debt service account equals pretty sure it's 1 month of mortgage for everyone. I know that they might have increased that in some later lending. Tom, I could be wrong on that. But I think the important thing to remember is a TA provider up in New York, she calls it the apocalypse fund. So if if your working capital account or your savings account is your rainy day fund, your debt service account is your apocalypse fund. You're only going to go to that when everything else has been exasperated, looked into, and you don't have any other money. You can pay your mortgage out of this account, but it's very unlikely. So this is usually just going to sit there and stay at this one amount. We've also got our tax and insurance escrow, which we talked about. You're making installments, and then your lender is paying some of those bills for you. Your property taxes, your general liability insurance, and some of those sorts of things. So that gets factored into this report that you see on your financials. So the Diamond Housing Cooperative has their operating or cash on hand at 26,000, which is, you know, we'd have to look at their trends to get a sense of if that's a good thing, but it is probably 1.5 months of expenses based on their budget. So that's not a bad operating account to have. Their savings account is 8,500, and it looks like ROC is requiring them to have 16,000 there. So that's probably a story that we should be looking into a little bit later when we get to the trends tracking. And they've got a pretty healthy replacement reserve at $96,000. Okay, so let's see, let's keep moving here. So we're moving into trends track. Oh, sorry?
I said I would be in a panic right about now.
If you were at the Diamond Housing Co-op?
Yeah.
Why would you be in a panic, Natividad?
Just a little bit, because that savings account is off track, and you know, you want to have at least a month's worth of mortgage payment in your savings account should anything happen.
Yeah,
But,
absolutely.
and to me, $26,000 in the bank is not a lot of money that can be wiped out in one split second. It's an
Absolutely.
emergency. It's not, you know, something you could take out of capital. So
Sure.
I think it sometimes doesn't it just depend on how big the co-op is too. Versus, you know, if you've got 200 or 300, you know, homes, or versus somebody that's got 50.
Yep. So the Diamond Housing Co-op has 66 sites that are occupied right now. So I think that gives you a sense of how to size it. There's another way to size it, like Natividad's talking about, which is you can size it based on your mortgage payment. You can also size it based on what you've budgeted for income per month. And then you can say, okay, my operating account, I want to have 2 months worth of revenue there that I would anticipate. Or maybe you're saying, I want 1.5 times of 1 month of budgeted expenses, right? I think expenses are the most popular way to kind of budget around your operating account. It's because you're saying, I want to like make sure to have cash flow that if we stopped getting any money right now, we can survive for 2 months before we'd have to shut down. But it's not really a shutdown because it's a different sort of deal, right? But I think, right, it's a conversation that every co-op has to have with themselves about what's that threshold? What is their operating account? What are people comfortable with? And then your working capital account or your savings account through Rock USA, they are setting that threshold for you. So that's the different part.
Okay, I guess I had the debt reserve and the working capital switched. I thought the working capital was the one that paid off, you know, if you got in a bind.
Oh, it is. Yes, that's your first line. That's your rainy day fund, Peggy. You're absolutely right about that. Your debt service account is, like I said, your apocalypse fund. Like, you know, it's you're on your last leg, right? Not many co-ops. I've never heard of a co-op getting there. So you're absolutely right. You don't have.
But that's one that needs to be 1.5 months or 1 month.
1 month
That's
of
what rock,
1 month of mortgage payment. Yep.
we need to raise ours.
Okay. That's something I can help you with.
Okay.
Cool. Okay, trends tracking. So this is the last part of the financial worksheet, and this gives you a little bit more of the meat on the bones, right? So you're seeing stuff over, in this case, a 1.5 year period. So the first thing that we're going to talk about are delinquencies. This is where you're going to find where your accounts receivable is, and this is your first line of defense. So when you're on the board and you receive your financial worksheet, I recommend the first thing you're doing is going to your delinquency trends tracking, right? So you should go there and you should see what that amount is, what it has been in the past, and how many households does that represent, right, for that month. And remembering that that total amount is not just what's owed from that month, but is accrued over time, right? It's all the delinquencies that you have going on. So knowing your current accounts receivable is really important. So you can kind of dictate whether your property manager, on-site manager needs to be being a little bit more vigilant or maybe targeting some individuals. So looking at this Diamond Housing Cooperative, can someone tell me what they're seeing with these trends here?
They got a great on-site manager.
So how are you seeing that nativity data? Are you looking, where are you looking for that?
For the amount of households for in 2020 versus this year, and the dollar amounts of the delinquencies are lower. So
Absolutely.
we got down to like $400 one time.
Wow, that's awesome.
Yeah, and then COVID hit. Slap in the face.
So next one is going to be your cash on hand. So this is tracking your operating plus your savings, the two accounts that you're really controlling and using the most. So you're aggregating that and putting that into an account. It's how you're paying your bills, how you're planning for unexpected expenses. And it's really important to kind of understand, because like we mentioned earlier, you might be booking that lot rent, but you don't necessarily know if you're getting all of the cash coming in from that. So this is a great way to see if that cash is coming in from the lot rent that's being incurred, but it's also a great way to see if there's some unexpected things happening to your cash. So can someone tell me what's happening, what might have happened at the Diamond Housing Co-op here? Who hasn't talked in a little while? Bev or Carlton? Do you guys have any insight here?
Looks like expenses were more at the beginning of the year,
Of which year?
2021. I would say probably their snow removal was higher.
Yeah, I could see that. Absolutely. What do you think? What do you think happened to their cash though? We've got this big change happening mid-year in 2020. So we talked about earlier how your working capital account is there in this rainy day. So I'm thinking that the Diamond Housing Co-op, you know, they had a major expense. Maybe they had a big tree come down and they had to remove a bunch of trees in the cooperative. And I mean, right? Thunderstorms happen in July, big storms come in. They had to hire a tree contractor to cut up a bunch of trees. Their cash went down significantly, but they could still pay that bill, right? Because they had that cash on hand, and then they've been working to replenish it over time. All right.
That's going to be us soon.
Hope not. Okay, and last but not least, your debt coverage ratio. I know that you've all heard your TA providers talking about this. I'm sure you talk about it at all your board meetings. And sometimes I just wanted to make sure that we're demystifying this as a concept, right? So fundamentally, your debt service coverage ratio in its most simplest form is just your net operating income divided by your debt service. What does this actually mean though? It's basically asking, do you have enough money to cover your mortgage payment for that month? And then some, so if you're under 1, it means that you don't have enough money to pay your mortgage from your net operating income. That's all that means. And it's just for that month, right? We talked about how this is just when you're looking at your revenue minus expenses, that you're just looking at as what's incurring in that month and that accrual basis. And so when you get that DCR, it's for that period of time and only that period of time. It's not a sweeping thing of that whole period. And so when you're looking at your net operating income, you can have different periods of time that you're pulling your DCR from. You can take quarterlies, you can do annuals, but mostly what you're seeing in this is you're seeing the monthlies, and then we're averaging them out for the year so you can see how they're averaging in total. So if you're at 1, what does that mean? Means you can pay
You're
your
in trouble.
mortgage, but you don't have anything else left over, right?
Yep.
But if you're over 1, Peggy, what does that mean?
That you're doing well, you can pay your mortgage and you have some cash on hand.
Absolutely.
Should be, yeah, within budget.
Yeah, no, you're perfect. You're putting that additional money and you're putting it back into those accounts. So this is just one of many metrics, and it's the one that Rock Capital chooses. But there's lots of metrics that you can choose out there. It's just what we're going to be talking about the most. And again, I want you to remember, this isn't taking delinquencies into account. Pat, I see your hand. You're on mute though. Pat, you're on mute.
Sorry.
Oh,
A
it's
few
okay.
years ago, Rock told us we needed to raise our rent. Was that based on this particular account, this particular report? Or do they look at all of them, or how does that happen?
How does that happen? So that actually happens in the budgeting process, which I unfortunately could not fit into this presentation because, as you can see, there's a lot of stuff going on here. The debt coverage ratio is something that they consider when they make their recommendation. But fundamentally, during the budgeting process, they're sizing your revenue and your expenses based on your historicals, your actuals from the prior year. And they're asking you, can you meet this DCR given those historicals, right? But that's one of many metrics. The way that your delinquencies factor in to your budgeting process is your bad debt. So every year you have to have a bad debt category, like it's just an expense line that appears in your profit and loss statement, and it's saying, I'm not going to collect these delinquencies and I need to write them off. And they get sized based on your accounts receivable at that time that you're doing that budgeting process. And so that's the way that delinquencies get factored in to the way that they're looking at the debt coverage ratio. But they're also going to be looking at, like Natividad said, we're reporting financials to them, but they're also looking at your third-party audit. So if those things aren't matching up, they're going to also be using that as a metric to determine what you're allowed to budget for and if you can meet that requirement. Everyone has different requirements in their loan covenants, so highly recommend looking at your own. Typically, it's 1.1 DCR that you must meet for the whole fiscal year. So it's not just 1 month, right? The Diamond Co-op in here, if you can see this screen, right, it met the 1.1, but they had that 1 month in July where they had 0.25 a DCR, right? But that didn't mess them up for the whole year because it averaged out, right? Because you're taking that DCR for the whole fiscal year.
Okay.
Does that answer your question?
Yeah. And it brings up another question. With the way that things have been going in the US regarding COVID and everything, and the amount of delinquencies that there have been due to people who aren't working, you know, because they were laid off or whatever. So if we had to write off too much this year, would it be wise to anticipate that probably Rock is going to say, you need to even all of this out, why don't you raise your rent?
So
Does
that's
that make
something,
sense?
oh, it definitely makes sense. And it's definitely something that at NCF, we're certainly trying to uncover and demystify, right? But I think you're absolutely right, Pat. Like you're thinking about this in the right way. And the advice I've gotten so far, I'll relay this for whatever it's worth, is some things that you can be doing this year, because we don't really know what's going to be happening in the future, right? With everything, with the eviction moratorium, but also the rental assistance, et cetera, and how that's going to impact those delinquencies. Review your bad debt policy write-off. Like if you have a bad debt write-off policy, this is a great time to review it. If you don't, your TA provider has a template and would be happy to provide it, and it's something that you could pass as a board. It's also a great time to review your collections policy, making sure that your on-site or your property manager is following everything to a T, that if there are delinquencies, that people are being approached with payment plans, and those payment plans are being adhered to and managed. These are all things that you can document right now that can help provide assurances to Rock USA. I know that doesn't answer your question, but these are things that we're trying to figure out and provide advice for as much as we possibly can without knowing more at this time.
Well, it would certainly show them that we're trying to be fiscally responsible and all of that, not that we're just letting everything fall by the wayside, and we're being proactive rather than reactive.
And it's not just showing your mortgage lender, it's also showing, your board, right? Your board, you have a fiduciary
Residents.
obligation to the cooperative, right? And that's on managing the assets and liabilities and the equity of your business. And so exactly what you're talking about, it's not just meeting the requirement of your lender, but you're being the best possible steward of your resources.
Right.
And you're trying to do that within the mission of your organization and your company at the same time. So you're balancing about 1,000 things right now, which makes what you're doing incredibly difficult, but also incredibly important, right? So.
Okay. Thank you. That was really helpful.
Cool. Glad. Let's see. What else do we have
Question.
here? Yep.
So going back to Pat's question about raising the rent, the one time that we were asked to do that, and that was during the building process of the storm shelter. So that raised $6, and that was voted on by all the members. And that's the reason why we had to do that. And one other time we had to do that because we got hit with a surprise tax hit from the county. And that was the other reason. As far as what we're trying to do right now as a co-op is to make sure that everyone and anyone who needs rental assistance help has every possible means available to them to sign up for the county, sign up for the state rental help, all the phone numbers that are available, and staying on top of it on a regular basis. So that way we don't just go, okay, well, we'll get back to them in a couple of weeks and see how it goes. This is a massive job to stay on top of it. We budgeted $10,000 for write-off, and our first write-off happened this week. So it's a massive job to continually do this right now and try and stay ready for next year, in the hopes that we don't even know what the budget's going to look like right now.
Right.
It's super scary to even want to write a budget for next year right now.
And don't get me wrong, Natividad, I wasn't looking
no,
for an
no.
explanation for our stuff, just thinking big ballpark picture. Yep.
Right, and that's for everybody, because somebody
Mhm.
might not even be thinking about how can we ensure that we're gonna get our rent? Well, you can by being on top of every available thing that there is out there for everyone, regardless
Right.
of who they are. You know, it could even just be somebody who just got sick and's been off for a couple of months or
Mhm.
something. So, I mean,
Yep.
there's a lot involved. We're trying to do our best that we can and keeping our fingers crossed it doesn't get worse.
So I have this whole third section, which is how to ask the right questions, but I'm also looking at the time and we've got about 6 minutes left. So I want to lift up, I had this one slide, I just want to make sure we've touched on it a lot. It's what are your lender requirements? We've gone through this list. I'm going to provide this PowerPoint presentation that you can refer back to. This isn't a complete list, but like I said, I recommend going to your loan covenants if you need to go back and make sure and know what your cooperative has obligations to towards your mortgage lender, right? And I think we've covered this whole list on the call, but just something to remind you there. My computer stopped scrolling. So how to ask the right questions. Every board meeting, you're making decisions about your cooperative. And whether you realize it or not, every decision that you're making has financial implications somehow, right? Some examples are, you know, we talked about at the annual meeting, offering lot rent as an incentive to attend the meeting as a raffle. That implicates the financials, right? Because it's reducing your overall revenue that you're budgeting for. Say you're considering giving your on-site manager a bonus, financial implications, right? Your snow removal person decides to quit mid-year and you have to get a new contract, financial implications. So what I was gonna do is go through some scenarios with you to kind of get a sense of how every decision that you could possibly have at a board meeting has these financial decisions. But I think I just want you to know that, you know, this information is there for you to be able to not only understand, but then to use as you're in your position as a board member. So on that note, I want to definitely leave these last 4 minutes to see if anyone came to the meeting with some questions that they would like to get answered. And if I can't answer them now, we can certainly talk about them offline and we can make sure to get those answered. So thank you, I guess, is also in order as we pause and see if there are some outstanding questions. And thank you for bearing with me on this sometimes complicated subject, but you all know your business better than I know your business. So these are, again, just tools to help you better do the work that you have in front of you. So I hope it was helpful.
I have a question. We don't ever really talk about this unless it happens to someone. Our community actually got a call from Capital, and that's Mike Sloss. I call him Dad when you don't want that phone call, right? And we, during our whole 10 years of being a co-op, got that phone call one time. It was scary. We didn't know what was going to happen, and we were at a point in our financials and situation where we were in trouble due to some unforeseen situation with an offsite management company that we had. So can you touch a little bit on it, or maybe you don't know, or you do know what happens when you get that phone call from Rock Capital?
Sure. I think I want to understand your question a little bit better of
it's more of a sharing situation if you really don't pay attention to your financials, and then all of a sudden you're in trouble. And so then what could happen in the long run is Rock Capital can call you in and then go over with the board members, your TA provider, what you need to do to get yourself in check Why did you get here in the first place? Can you not get there?
What were some of the signs that your co-op was in trouble at that moment, Natividad? Like, how did you know as a board member?
We didn't. Unfortunately, we did not have seeable financials with the ex-management company. So we didn't find out until we were getting ready to fire them and they quit. And we got all of our financial stuff back and found out that half of our stuff wasn't paid.
So,
And
okay, that's
less money, no money in the bank account that we didn't realize was lower than it was supposed to be. So everything was fake, basically, until they were gone.
Yeah, what I'm hearing is you didn't have accurate financials. You thought you had information you didn't have and you couldn't trust it. And then that's also, I wanted to lift up one other thing that you said, accounts payable. So those are part of your liabilities and that's not included on your financial worksheet. But that is something I highly recommend everyone ask either their TA provider or their property manager, their on-site every single month. What are the outstanding bills that we've incurred but have not paid? Because that is going to balance against your cash flow. But to Natividad's point, I think every cooperative has had their moments, right? Where they either could be called by Rock Capital or have been called by Rock Capital. So I'm wondering if this would be a better opportunity for people to share their experiences. I think when you get a call from Rock Capital, your TA provider should be there, right? And they should be your advocate, right? They should be trying to problem solve the systems and operations breakdown that led to that point. Because as a board member, you have to ask yourself, what did I not do up until this moment that has led to this situation? But then how could I have better used the resources that I had around me to ask those questions? Or how can I hold the resources I have around me more accountable, right? So it's not all on your shoulders, right? You're part of a team. The board of directors should be a team and your TA providers should be your resource, and you have a hired bookkeeper and property manager, but they don't always perform, right? And so checks and balances are always really important. Doing an annual audit of your operations. You do a financial audit because it's required by your lender. It's also a good practice. But do you do a financial operations audit? How are things being reported to your bookkeeper, your property manager? Can you trust your financials? And are they matching the financials that you're sending Rock USA versus what you're getting back in your audit? Is that kind of helpful in what you're getting to, Natividad? Should I just be quiet and see if anyone else wants to say something?
No, that helps a lot because, no one talks about it ever, even when it happens to you. And then you as a board member, especially as the president, you can lose some serious trust in people outside of your co-op. And then you start to feel like guarded. And so you try not to let anybody do that to you ever again. I'll tell you what, we learned an extreme lesson on how to kind of sort of get rich fast and handle everything in 3 months to be able to make a mortgage payment even. And so that's how scary it was. That is like something I hope to never happen again. No one ever talks about it. So when we talk about financials and stuff, that's a humongous part about what could happen if you don't have good control of your financials in every aspect, including your payables. I will hound the heck out of a contractor to get me an invoice. Like now, I need an invoice now so I can pay you because we're looking at a 2-week out to pay them once it gets in the system.
Yeah, and I hope it's okay to share this, and I'll keep names out of it. And I know in the past, another cooperative has had the same trouble with their financial bookkeeper, and the board didn't trust the financials. They weren't matching the loan statement, and they made the really difficult decision to fire that person and then transition to a new bookkeeper that took a tremendous amount of capital, right? Because then they had to transfer all the financials and go through the headache and the hardship. And, you know, it took a lot, but now they have those accurate financials and they can trust that at every board meeting. And so, you know, it takes a lot of courage to go down that path, but it also takes a lot of money, right?
It so can, and I would recommend, highly recommend, if you have an offsite of any kind, to bring them in at least a couple of times in the year, just to sit with the board. We just recently got a new president at the management company, and we knew there was some extreme problems, and we wanted it fixed. And so she offered up, and they came, along with 2 accountants, and they came and met with us, and we finally got everything in check. So it's just, there's so many things you learn in your first year all the way to 10 years plus. I'll tell you what.
All right, well, I'm looking at the time. It's 8:04, and I know it's getting late for a lot of people. I just want to be respectful of people's time. Like I said, if you have any additional questions, feel free to reach out to ask them, ask your TA provider, ask board members. I'm also available as a resource. I'll be sending out an email after this. I hope this session, like I said, was helpful. I hope it demystified some things, or at least got you thinking about some questions that you might have at your next board meeting, right? You might have already known all this stuff, but it's always a good refresher to remember how your financials are really a powerful tool in your toolbox as a board member. So thanks for your time, everyone.
Thanks, Emily.
That was a great session.
Thank
Thank you so
you.
much.
Yeah, thanks. Thanks for letting me
thank
talk
you.
so much. You were extremely helpful.
Oh, you are great, Pat. Have a good
Got some
one. Yeah.
great questions, Pat.
Thanks.
Thank you.
Thanks all.